Good morning from Chicago, everyone. It is 8:11 a.m. Chicago time, May 20th, 2014. It's a Tuesday. Trading futures, options on futures and foreign currency involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. A real quick rundown of the overnight news. There wasn't much. UK CPI year on year came in a little bit higher than expected at 1.8 versus 1.7. There are reports, unsubstantiated reports, that the French sovereign debt ratings will be downgraded, resulting in a wider spread between the French and German 10-year yields. The World Gold Council demand report reveals that gold demand in India and China has fallen in Q1. Gold is currently trading sideways, really actually down $5 or 0.39%. Pretty much flat across the board, seeing sub 10 basis point movement across the board, with copper dropping 1.14%. But DAX, Eurostox, Bund, pretty much flat on the session. Looking ahead, today's session doesn't have any economic releases in the U.S. The European economic releases are behind us. We do have a number of speakers, though. At 9:30 Central, we have ECB's Lint and Lycanen at the same time. At 11 o'clock, we have ECB's speaker Nowotny. At 11:30 Central, we have Fed's Plosser. At 12, we have Fed's Dudley. And at 12:30, we have Bank of England's Bean. Okay? So just pay attention to that if you have a news feed. Let's look at the charts now. So a quick recap of yesterday. Yesterday's open was open test drive. Very clean auction yesterday. Opened right at the level I'd spoken about in yesterday's Trader Bite. The primary hypothesis yesterday was to open in this LVN zone, 1871 being the key LVN left behind from Friday. We opened right at it. 1871 is the opening print. Quick tests down into prior day's value area. If you recall, the prior day was pretty much a normal distribution balanced day with a late break. The market broke higher at about 1 o'clock Central, and forming this this double distribution profile. But the value area here is pretty valid. We tested lower into 69.25 and then immediately found buyers, aggressive buyers, to push back up to our targeted area, 75.25. So it's yesterday's hypothesis was if it stays above 70.25 before the open, it is expected to continue higher towards 75.25 today for an eventual push back towards 81.50 again to continue Friday's rally. And that's what we did. We went right to 81.75. Pulled back 82, pulled back 82.75, pulled back 83. So we're pretty much stuck in that 81.50 zone that's been marked for quite some time here. It is also the top of the gap zone that we leave behind from the 13th, this gap zone right here. So we have a point of control. We touched this point of control on a gap on Monday of last week. We touched down, then we rallied to new highs, pushed to 98.50, broke lower, opened right at 81, tested 81.50, fell right back to 64.50 and 59.5. These levels have not been added. They've been here for weeks. 59.5 to push to 59, finds its base, finds buyers, comes back to 68 for a point of control. The next day tries lower, higher low, nice little trend line here, higher low, a push to 70 and a 70.50, 70.25 being the key LVN left behind from last Thursday, pull back to 65 against the 64, actually pulled back to 64.50, push again, pull back to 65, then catapult right out of the 70 quarter top, and finishes at 75 on Friday with the upper HVN I was just talking about. So overall, the auction is very, very methodical here, with a higher time frame stepping in when appropriate, trading off of longer term levels, the composite and the micro composite in this area. So we're seeing very clearly where the flow is. Yesterday we finished with a very, very poor high, 82.75 against 83, multiple presses, and you'll see here that the price just below the high of the day is at 27,000 contracts. I mean, they really, really tried to lift this. So the expectation is for continuation higher on the overnight, and that's what we got to 84.50. Once we break into the range we were in before we dropped through the gap, the expectation is for the market to push back up to 88 even, right into this LVN, old LVN. Which is probably invalid after this last test here, and 90 quarter being the target above. And then above there, the high years at 92.25, 94 quarter is the point of control above there, and then of course 1900 century figure above that. So overall, yesterday put in a higher value area, higher high, higher low. Again, a very methodical play yesterday. You know, unfortunately, the move up was very quick, and that's the nature of an open test drive. We do not fade an open test drive. Generally, it means a higher operator is in the market and will likely continue to put that position on. Okay, so those are the key elements of yesterday's auction and the key features. Yesterday we left an LVN here at 78.75. The low is 18.79, just one tick above that. Would like to see, you know, for this to continue higher, you would like to see that hold if you're bullish. You'd like to see that hold, and you'd like to see this weak high get taken out. That's the expectation for today. The primary expectation for today. So today, I'm looking for this to test lower towards 79, probably breach the 79 just to break the low to fill in that overnight stat, and then turn around for an 81.50. Note the 81.50 point of control. It's not a coincidence, right against that prior high right here from last Thursday. 81.50. We move the point of control to it. The 81.50 is now becoming invalid now that we've moved the point of control to it. The market's already traded it out. It's no longer an LVN. So blip, there goes that number. I'm keeping the gap zone on here just to monitor how the market trades around it if it does come back through, as it is now. But essentially, I'm looking for a test lower in the morning, a finding support, finding responsive buyers back to 81.50, and then a break of the weak high left behind yesterday. Okay, again, market's one-time framing up. We have an inside day here, lower high, higher low on Friday, and then we have a higher low, higher high with a move up in value and point of control. Okay, the profile shape is looks like short covering. I don't know if I'd call it a double distribution. I'm not seeing a double distribution. We've left a decent stem behind, and for that reason, I'd like to look at the market profile version of this. Let's pull it in. Let's pull in 30 profiles. So this is last Thursday. Here's Friday, inside day, left a single print. Yesterday we opened, tested lower into the volume value area. The TPO value area is higher. We went right to the volume value area and then found buyers to push up on a P-shaped profile, which looks like short covering, and then to close to push back into this resistance area we've left behind at 81.50. Point of control 81.50. also on the TPO. If we look at the longer term profile, though, here's the monthly. We've only pushed partway into April so far with a test of 55 and a quarter. This is an old level that we're carrying from way back here in March. Test into 55 and a quarter, and we're forming a really big balance zone here between about 61.50 to about 80. And yesterday we've moved out of it, so now we're going to be looking to target this LVN on the TPO, which is around 88, 86, 75, 88, something like that in this area here. Okay, so that's where we're looking to go today, and then once we break that, then we're looking to test the other side of the high. So we've tested one side of this high volume node. This is the neckline here. Very, very important that it breaks through 86 for the bulls, and then once it breaks it through 86, then we start to push towards those areas above that I just talked about, the 90 and so on. This is a weekly. Really clear balance right here on the weekly, 44 to about 86, okay? And then we finally break through it last week, push towards 98.50, very wide value area and very thin in the middle. And look at where we are yesterday. Here's the single print on the weekly. Let's zoom that in. Single print on the weekly, again, coincides with the 81.50, 82 area. Closed that yesterday. We're trading in this thin zone that we left behind from yesterday, from last week. We're filling that in, and we've only been doing that for a day. So overall, looking for an 1890 test today. Again, a week high, double TPO high. You can see it here, 2 30-minute blocks right at the top of the profile, and I'm looking for a break of that today. Okay. Overall, in the longer term chart, 24-hour session, we still, all we did was we pushed the 98.50, tested the 59.50 again, 64.50 zone, and we're trending back up into a channel here. That's what we've done over the last couple of days in all sessions. Essentially, the market's just not letting go of these highs, despite the fact that it makes weaker highs very, very slowly and very non-deliberately. We still are holding prices above 64.50 on the balance zone. Okay, so the market's still a bull long term, and if we split off what we've done since the high, you could see here on this blue profile that we're in this thin zone, like I just showed in the prior market profile chart. So that's the argument for higher. The argument for lower is responsive buying. This is hypothesis 2. Responsive buying towards 81.50 and 82, the overnight point of control. Let's look at the overnight session. Very bizarre session. Just an open auction, 2 ways, double top at the IB high of the overnight. Pops right through on the British numbers, and then comes back down. It's just swinging wildly in both directions. The volume's a little bit lower than the median volume, but it's pretty decent. It's 8:25. We have 5 minutes. I doubt we can fill in 25,000 contracts in the next 5 minutes. It's possible, but overall balanced profile. The overnight session not giving us anything. It has a weak low, 79.25 against 79, with volume dropping off fairly quickly here, but not too bad. So there's not much from the overnight except to say that it's a pretty tight range, 5.5 points with almost median volume. Expect a pretty good push on the open one way or another. As I said, the second hypothesis, the primary hypothesis, is to test the 79, break it down into 78, 75, possibly through I expect the initial rotation to be at least 2.5 points, so I don't expect it to stop at this point of control, the LVN here. I expect it to push through by a little bit, and then I expect responsive buying to come back in and push towards 81.50 to take out the 83, and then start moving up towards 88.90 quarter. Hypothesis 2 is for an early responsive buying frenzy up, pushed higher, fail to take out the top, probably will take out the top by a tick or two, and then I would expect for hypothesis 2 that sellers will step in and start to bring this back to retest all the way down to through yesterday's entire profile, all the way down through to 70.25 again. Just to give us a better base for a higher high on the balance. So that's really it. That's all I had for you. At 8, it's 8:27, 3 minutes. One thing I want to leave you with, though, a thought, something that occurred to me yesterday on a conversation. You have to ask yourself a question as a trader, and that is, what is your identity? Okay, this is a critical question. I know it sounds like fluff, but it's really, really important for you to understand that you're operating as a trader from the basis of what is your identity. Do you see yourself as an amateur who's susceptible to errors, who's easily influenced by others who know more or better, or do you see yourself as a career trader, a professional in development, or a professional in training? The difference between those is that an amateur is okay with errors, is okay with blowing through stops, is okay with not having limits, and so forth. If you see yourself as a professional, you'll act as a professional. I think that'll go a long way towards you developing the discipline to see the market for what it is and to actually do the work necessary to develop as a trader. If your mindset is fixed in that you believe you're unlucky, you believe it's hard, you believe that it's never going to happen for you, then save yourself and your family and your loved ones the pain of dying by 1,000 cuts. But if you want to make it, you have to understand that you're trading against professionals in a level playing field, and we're all seeing the same stuff. So make a decision to see yourself as a professional with a growth mindset. In other words, what you don't know, you'll learn, and you'll persevere, as opposed to just chasing information from one person to the next to the next. Good luck.